Hey, brother teacher here. This may not be palatable or acceptable to some, especially people that may be in the financial industry and work in that particular field. Um, if you don't want to listen to it, you don't want to see it, turn it off and go somewhere else and spend your time. But this is about how banks hurt its customers. Fundamentally, all corporations, all banks are in the business of making money. They exist to make money. I want to make that plain right off the bat that we do understand this. We comprehend that this is the purpose of all corporations and businesses is to make money. Now, with that said, we were taught certain things when we were children. We were taught, for example, to have faith in the clergy, in the church, have faith and respect for school teachers, police officers, doctors, firemen, and nurses, and so forth. We were taught these things. We were taught if we wanted to save money, to take our money to a financial institution such as a savings and loan credit union or a bank, traditional bank. But we were not taught how banks actually operate. Now, don't forget that I just made the statement that corporations and banks are in business to make money. Now, banks, if you don't already know this, they make money hand over fist as it relates to its customer base. They primarily make their money in loans and service fees. Once upon a time, these were fees that were not allowed because they were overtaxing the public. And it escapes me right now what they were called, but they changed the terminology and or the verbiage later on because the government got on them for usury, if you will, and the banks changed those extraordinary fees that they were charging the customers at the time. They changed the term to fees, and they call it a fee for this and a fee for that. But at one time it was interest for the most part. So now they're called fees, and that was their loophole. That was their way of making that same amount of money, if not more, from the customers. And bottom line is still usury. Usury basically is when you charge someone more than is tolerated by the general public. For example, let's say a loaf of bread in the grocery store market price is about $2 today. That's the average price. But on the other side of town, you have one store that's charging $8 for that same loaf of bread. That's called usury. It is when you go outside of what is the norm that's acceptable by the general public for greed. In other words, you're being a shyster, as some might say. Anyway, let me get back to the banking situation. There are 4 ways that banks hurt their customers. But we keep on taking it. We keep on accepting their practices. We don't really complain. We just see it as sort of an unnecessary evil. But I want to begin here. These 4 things that banks do. First of all, they require, many of them, that you have a minimum balance in your savings or checking account to avoid a service fee. A lot of banks, some accounts, they want you to have a minimum. In some savings accounts, for example, of $100. Some other ones, $300, $250, $500 within a quarter. So if you fall beneath that amount, they charge you a fee. $8, $10, $15. Now, the crazy thing is this. It's your money in the first place. That's number one. Number two, while your money is in the bank, they're making money from your money being on deposit in their bank. So they're already benefiting from us when we have the account open. They want to benefit exponentially. So they say, well, for us to benefit the most from you, we want you to have minimally this amount of money in your account so we can get the most out of you. If you fall less than that, then we're going to charge your account this amount of money. Can you say extortion, ladies and gentlemen? Okay, that's one thing that hurts the customer. No one should be charging you for your own money when they're already benefiting from you in the first place. That's number one. Number two, if you are a customer that's been with the bank several years and you're in good standing, you very rarely have had a draft or a check not clear or bounce in their institution. If it happens 2 times in a year or 3 or 4 times in 2 years, they should not charge you an overdraft fee. Because again, you are a regular customer, especially if they see you on a regular basis. Why are they charging you $35, $45, $50 for a check that doesn't clear and you were only short $10, $5, and they still charge you $35, $40, $50? Why? That's how they make their money. But have them tell it, it's automatically generated by the system when it's overdrawn. Well, the manager can change that once you have a conversation with the manager or the assistant branch manager. They can change that. But do they want to change that? Not at all. I've heard them say over the years, I'll do it this time. Just make sure that you have money on deposit to cover your checks in the future. Please, spare me. Are you serious? I've been here 5-6 years as a customer, and my account has been in good standing. So I have one check that doesn't clear, and it was only $5 off. True story, ladies and gentlemen. Years ago, when I say years, I'm talking about 18 years ago, I had a bank account. My account was overdrawn by $1.75. Do you know they charged me $40 for that $1.75 insufficient fund? They did. And when I walked in the bank and I told them, I said, wait a minute, I see you assess me this overdraft fee. I said, can you waive that? It's only $1.75. And they told me, the manager said, we're going to have to charge you something. I'll make it half this time. Just make sure that you have enough money in your account next time. I'm serious. They charged me $20 for the $1.75. Can you say extortion? All right. That's the second thing, are the fees. All right. Let me cross this one out. The third one is when you, the bank, allow a third party, such as the IRS or a court, levy a customer's account, freezing it, thereby taking money out of it to pay a past due tax bill or something else. Now someone else might say, well, if you owe taxes, then they should garnish your wages, or they should levy your account, and so on and so forth, all this kind of stuff. Most people are poor, working poor, middle class. Everybody has some sort of an issue. If the bank is there to protect its customers and its customers' assets, and they say that they have insurance to cover you up until $100 and some thousand, whatever it is, they owe it to you, the customer, to inform you before that action takes place, not after. If it's going to take place, you shouldn't walk in the bank one day going to take some money out to pay a bill and find out that your account is frozen. They do it just like that. You didn't get a letter saying that it's pending or that it's about to happen or that you have 3 days grace period. They take it and you're notified afterwards. Can you say extortion? No one has a right or should have a right to take anything from the people over a debt. Should not, ever. And the fourth thing that banks do to hurt you, which is akin to the third one, is when you have a safe deposit box with your family, jewelry, heirlooms, death certificates, birth certificates, marriage license, and whatever, all of those types of important papers, and even some cash and maybe some coins that you collected or was passed down to you from your great grandfather. These types of things. Again, when you owe some third party something such as the IRS, and there's a court order supposedly that allows them to come in and gain access and seize your property from your safe deposit box. The bank should never allow that to happen. Can you say extortion? So, in my conclusion, my question is this for you. Do the banks really benefit us? Or do they benefit themselves and the higher powers that they serve? That's it. And that's all, brother teacher.